Hey, this is Matt from InvestiQuant. Today is Monday, October 25, 2021. Friday, the markets pushed higher, made new all-time highs, and then pulled back, taking out the prior day low, and then bounced into the close. That gives us an outside day pattern, which is a pattern where you have a higher high and a lower low. And we also have a 50-day high that formed on that day. The overnight session right now has been pretty quiet, so we are kind of trading within that overnight or within that outside day pattern as we approach the open. We're trading just a little bit higher at the time of this recording, but not much. So we're going to be looking at that pattern this morning. What has happened following an outside day at a 50-day high, followed by a gap up within the prior day range. So let me go ahead and set that up and discover. We'll use all four instruments. The setup will be based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, right now, we are trading up, and we are trading within the prior day range. I'm going to add both of those to the test here by clicking on gap up and then equals next to open in prior day range. That'll add both of those pieces of information to this test. Next, I'm going to describe that outside day pattern that also made a 50-day high. So the easiest way to do that's just going to be from working from the active today section. And I'm going to go down to the new highs section, and I'm going to say that the prior day was the highest high of the past 50 days. That's the second to last option here. And then I'm also going to go right below that and say it also made a lower low. So it made a lower low and the highest high of the past 50 days. That highest high of the past 50 days means it will be higher than the prior day high. So by definition, that makes an outside day pattern that is up near the highs of the recent trading action, with that being a 50-day high. So we've taken out some significant highs, including the prior day. All right, next I'm going to go into the indicators. I'm going to say that we are above a 200-day simple moving average. Probably don't need a 10. I can add it just anyway since it's here, and then I can click view results. All right, here we go. These are the results based upon entering the market long at the open of regular trading hours, exiting at 4:15 p.m. Eastern Time. When you gap up within the prior day range, and the prior day was an outside day that made a 50-day high in a bull market environment. So historically, we've got 39 samples in the S&P, 55 in the NASDAQ, 31 in the Dow, and 32 in the Russell. Win rates on these coming in slightly favored for the S&P at 56%. The NASDAQ's a little bit stronger at 60%. The Dow is the strongest, 68%. And Russell dead even at 50%. So win rates on these scoot a little bit towards the upside if you look at them as a whole. If we go to the average moves here, the average win and average loss is very similar in size for the S&P. The NASDAQ, slightly larger average loss. The Dow, a little bit larger average win, and the Russell, a little bit larger average loss. So we're kind of mixed on the moves, which way has it been larger historically. But as a group, these have closed above the open a little bit more often than not. So hopefully you found that helpful. Good luck today, and we will see you next time.